Well, hello everyone and welcome to Moementum Finance channel. My name is Mo, and in this video, we'll be reviewing our stock market investment portfolio, currently with a market value of $466,000. We'll walk you through the 9 different holdings that we have as part of this portfolio, our dividend income from it, what dividend yields each one of these holdings provide, their frequency, next dividend date, and so much more. Our largest holding in this portfolio is FTSE Canadian High Dividend Yield Index ETF with ticker symbol VDY. We currently have a total of 3,700 shares between my wife and our purchases have an average price of $41.58. Given the last trading price for VDY, which was at $41.79, this holding is currently up by about 0.5% or an unrealized return of $780 positive. VDY accounts for about 33% of our portfolio at this time. VDY does pay a monthly dividend, and currently it has a dividend yield annually at 4.5%. Through VDY, we are getting exposure to Canadian high dividend paying stocks, and it includes 56 of those top quality dividend paying companies that are part of the underlying holdings of VDY. Their next dividend payment day for VDY is slated for June 8th of 2023. VDY has a management expense ratio MER of 0.22%. Looking at the past returns of VDY over the past 5 years, ever since its inception, we are seeing the overall return of positive 25%. Moving on, we are going to be taking a look at our next big holding, which is Vanguard S&P 500 Index ETF, the ticker symbol VFV. Through VFV, we are getting exposure to the 500 largest companies that are part of the S&P 500. In fact, it has around 505 specific holdings beneath that. It gives us exposure to the US. With VFV, you're getting also a dividend income, but it's mainly geared towards growth and not so much on a dividend income. It does pay a dividend distribution, however, on a quarterly basis and has an annual dividend yield of 1.3%. VFV has a lower management expense ratio compared to VDY that we looked at earlier. Its MER is only at 0.09%. Looking at the past 5-year return of the VFV is showing a positive return of close to 60%. We currently have 1,302 shares of VFV, which we purchased at an average price of $93.13. It's showing an unrealized positive return of 8% or about $9,705. VFV currently accounts for 28% of our portfolio size. Next, we have Vanguard All Equity ETF portfolio, VEQT. It provides us a diversified exposure to investing in the stock market. Through VEQT, we're getting 100% exposure to stocks, but on a diversified level. It accounts for about 42% exposure to US, around 30% exposure to Canada. I believe closer to that 20% or so to international, and a smaller portion, around 5 to 7% exposure to that of the emerging markets. It has a management expense ratio of 0.24% and a dividend yield of 1.9%. It does, however, pay its dividend only once a year. Its next time payment is slated for late January of 2024. Through VEQT, we are getting exposure to 13,650 different companies and stocks that are the underlying as part of the equity. Its total return since its inception goes to show a positive return of 37%, roughly. We have a total of 2,987 shares of VEQT, and all of these holdings are part of our Smith Maneuver portfolio for VEQT. It's currently up by 1.9% or approximately $1,880. It accounts for 22% of our overall portfolio size. Next, we have iShares Core MSCI East and Far East IMI Index ETF, XEF, which gives us exposure to international markets. These includes countries such as Japan, France, Switzerland, Australia, Spain, and Germany, and you name it. Those are some of the top countries that are part of the international markets. It does pay a dividend yield of 2.1%. Its dividends are paid on a biannual basis, and the next dividend date for XEF is slated for June 30th. We currently have 707 shares of XEF in our portfolio, which is up by 5.9%, or showing an unrealized return of positive $1,357. It accounts currently for 5% of our portfolio. Looking at the past return over the 5 years for XEF, it's up by about 8.6%. XEF has approximately 2,600 different companies as part of its underlying stocks. Next, we have another ETF that gives us exposure to the US stock market. It's iShares Core S&P US Total Market Index ETF. Through XUU, which is the ticker symbol, we are getting exposure to the entire US stock market, not just the S&P 500. You might then be asking why the number of stocks underlying for this fund is only at 115. It seems smaller than other numbers that we talked about, like 500. The main reason behind it is that XUU, as part of its underlying holdings, has some other ETFs, and those ETFs hold thousands of other companies beneath them that are all US stocks, and that's how, in fact, you're getting exposure to virtually the entire US stock market. That's another holding that we are gradually building on. We currently have about 4% exposure to XEU in our portfolio. This consists of 457 shares of XEU, which we purchased at the average price of $41.07. Given the last trading price for XEU, our shares are up by 2.2% or showing a return of $416 positive. Over the past 5 years, shares of XEU have been up by over 53%. It's worth mentioning that the management expense ratio for XEU is only at 0.08%, which is very, very small fee. And its next dividend date is slated for June 30th. XUU does pay its dividend on a quarterly basis and has an annual dividend yield of approximately 1.5%. Next, we have shares of Vanguard Total Stock Market ETF, VTI. This is one of our holdings that is in US dollars, and that's why we hold it in our RSP account as part of our US dollar account, and to avoid having those withholding taxes. We have currently 36 shares of VTI, which is showing to be up by 1.4% or approximately $135 positive return. It accounts for 2% of our portfolio. VTI has a very, very small fee of only 0.03%, and it gives us exposure to the US stock market. It does pay its dividend on a quarterly basis and has a dividend yield of 1.6%. Next dividend date for VTI is slated for June 28th, and the number of stocks as part of VTI is 3,895 shares, which is a massive number of US companies that you get exposure to through this one single ETF. Next holding on our list is another one in US dollars, Vanguard Total World Stock ETF. It gives us exposure to diversified set of companies throughout the world, including US, North America, including international and emerging markets. In terms of its dividend yield, VT has a current dividend yield of approximately 2%, and it does pay its dividend on a quarterly basis. The next dividend date for VT is slated for June 22nd. Through Vanguard Total World Stock Market ETF, VT, we get exposure to 9,543 different companies. Looking at the past returns for VT over the 5 years, it's showing a positive return of 25%. We have currently 75 shares of VT, which is up by 0.9%, just shy of 1%, or up $85. VT currently accounts for 2% of our portfolio. Next, we have iShares Core S&P Toronto Stock Exchange Capped Composite Index ETF with ticker symbol XIC. Through XIC, we are getting exposure to the entirety of stock market in Canada virtually, and that's a very amazing holding because we just didn't want to merely only get exposure to dividend paying ones, but also the broader stock market in Canada, hence the exposure to XIC. It has a dividend yield of 3.2%. It does pay its dividend on a quarterly basis, and the next dividend date for XIC is slated for June 22nd. Through XIC, we are getting exposure to 232 different underlying holdings. Over the past 5 years, shares of XIC have grown by approximately 27%. And lastly, our ninth holding in this portfolio is shares of iShares Core MSCI Emerging Markets IMI Index ETF. As the name suggests, through XEC, we are getting exposure to the emerging markets. These include main countries such as China, Taiwan, India, Saudi Arabia, South Africa, and South Korea, and a few others. XCC does provide a dividend, but it's provided on a biannual basis. Its dividend yield currently is at 2.6% annually. Our shares of XEC are currently down by about 0.8% or down about $55. XEC accounts for 1% of our portfolio size. Looking at the past returns in the 5 years for XEC, in terms of the market price, it's down by close to 12% over the past 5 years. Through XDC, you're getting exposure to 3,000 plus companies in the emerging markets, and it has a management expense ratio of 0.27%. Looking at our asset allocations, currently we have 45% exposure to the US market, 41% exposure to Canada, 10% exposure to international markets, and 3% to emerging markets. However, our target asset allocations are showcased here as well. We are aiming for 50% exposure to US, 25% exposure to international, 15% to Canada, and only 10% to emerging markets. The reason we are going to, over time, trying to lessen our exposure to Canadian markets is that Canada is not definitely one of the largest economies in the world. Hence, we don't want to have over exposure to Canadian markets. Hence, aiming for that only 15%. The addition of the international emerging markets are definitely there to ensure that our portfolio is a lot more diversified. And although the US market has crushed it and knocked it out of the park over the past decade or so, you can't just put all your eggs in one basket and purely only invest in the US markets. Hence, addition of those international and emerging market exposure are slated here in our portfolio that we're working towards reaching to that target allocation. Lastly, if you look at the latest stock buys over the past week, we added to our portfolio by buying shares of VDY, VFE, VEQT, XEC, and XEF. We didn't have any stock sales or ETF sales in our portfolio over the past week. As for the dividend highlights of this portfolio, the way that this portfolio is currently set up with its current size, it is earning us an expected annual dividend of $11,332, which is just amazing. If we equally divide it by 12, it gives us an average of $944 in dividend income. And if you divide it accordingly to calculate the average daily dividend income, it's a nice $31 dividend income per day. Our portfolio currently has a dividend yield of 2.4%. You might be wondering, what is our average portfolio MER, given that it consists of 9 different holdings and each one of them have their respective MERs. Based on the size and exposure of each one of those holdings as part of our portfolio, our average portfolio MER is at 0.17%. Well, thank you so much everyone for watching this video until the end. I hope you found it beneficial and hopefully it inspired you to also want to start investing, saving, and working towards financial freedom through investing in the stock market passively. These 9 holdings that we have are the ones that we've decided that are the best picks for us. It's not intended to be a financial advice whatsoever. So please be sure to do your own due diligence and research before buying any of the shares that we've discussed in this video or any other videos that you watch here on YouTube for that matter. But if you have any question, I'm more than happy to share my thought process and rationale behind picking these specific holdings and why I'm adding more and more funds to this portfolio. Leave me a comment down below and I'll be happy to respond to any question that you might have. Thank you so much for watching this video until the end. I appreciate it if you can give this video a thumbs up and of course subscribe to our channel here on Moementum Finance so that we can continue to have more like-minded individuals that are planning to reach financial independence come together through this channel and have a very healthy discussion and learning together. Thank you, and I hope to see you all next time.